All right. Good evening, everybody. Good evening, everybody. Is everybody okay? Are you guys good? We're getting our meeting started. And just so you know, if you are maybe on night shift and you're not supposed to be on your phone, we are broadcasting on Facebook. So just make sure that you are aware of that so that you're not seen in places that you are not supposed to be seen, that you are in a meeting of this nature. So I want to welcome everybody to our Zoom session today. Welcome to the Wealth Academy. Let me see. Can everybody hear me well? Can you guys hear me well? Let me see a thumbs up if you can hear me well. Everything's okay. Right. Leselo says yes, everything is perfect. That is awesome. That is awesome. Mr. Nondenja says all is well. Awesome. Right. So let's get the show on the road, guys. I'm very, very excited for today's episode of the Wealth Academy webinar. Today we've got a very special guest. I'm not sure whether I should call him a guest because he's also, now part of the Wealth Academy coaches and obviously specializing, in taxes and real estate. He is not only a tax expert, he's also a real estate investor, which makes this call quite exciting. So for those of you who don't know me, my name is Lonabo Fololo. I am an entrepreneur. I'm a real estate investor. I bought my very first property in the year 2009 and, have been an investor since then, been off the market and on the market, I've built an incredible, property portfolio of which I'll continue to build. And over the years, I've really, sort of advised a lot of my friends on, real estate investing. I wouldn't even call it advising more than it was why I invest in real estate, why I'm excited about real estate, even though I'm involved in many other things, like cryptocurrencies and so forth, which, seem to be making people a lot of money in a much shorter time frame. But why is it that I'm also, excited about real estate? So that's what I've been doing over the last, few years, up until a few of my friends said, you know what, we attended this and this particular seminar. And, the prices that were being charged, for half the information that you've given us, over the last, few months, it's ridiculous. So you should really, really consider creating a platform where you can educate people about real estate, right? So that's what gave birth to the Wealth Academy. So, sometime last year, I decided to say yes, to let's call it a call, right? To the call to create this platform called the Wealth Academy, which is, about real estate investing. It's about financial education and all things, wealth building through real estate. So, we've touched on so many different topics in the past, so many different areas concerning real estate investing. But today we are touching a very, very important topic, which is, the tax code, right? All of us, most people are very much afraid of an institution called SARS, right? If somebody gets an SMS or an email coming from SARS, the knees start to wobble, people lose appetite and so forth. I know that I'm talking from experience, right? So how many of us, how many of us are afraid of SARS? I've had lots of people sometimes, talking about business opportunities, and the first thing they would ask, what about SARS? How much tax are we going to pay? And I've now learned that tax is not something to be afraid of. It's actually something to be embraced. So if you are afraid of an institution called SARS, I want you to put in the comment section and say me. Okay? We're not going to ask you why, but if you know that you are afraid of an institution called SARS, I want you to say me in the comment section. Let's see who is like me and who is afraid of an institution called SARS. So it seems like I'm the only one. I can't be. Okay. At least I've got a cousin here who says me. Okay, Kawakazi as well. So it's quite a few people who are afraid of this institution, right? So our guest today, Mr. Mandilake Nondenja, is going to help us to understand, really the tax code. What is it? Why is the tax code? Why was it created? What is it meant to do? Should we be afraid of it? How do we best partner with an institution like SARS to make sure that we're able to grow together with this institution, right? What is it that the government wants done, and how is it that the government is actually using this institution to make sure that we as entrepreneurs partner with this institution, and by extension with government, to make sure that obviously as real estate investors, that we provide accommodation for the nation. So if you're joining us from Facebook, you're more than welcome to ask any question regarding taxation, building wealth in real estate, through the comment section. We'll be monitoring those, and we'll make sure that when we come to the Q&A section right at the end, we'll be able to share your questions, so that our resident expert today can be able to take us through any of your questions. Guys, I'm really, really excited about today, because I know that this is a topic all of us who are either in real estate or want to get into real estate really, really have to understand, so that we can build correctly from the beginning. So without wasting any more time, allow me to introduce to you on stage a gentleman all the way from Port Elizabeth, who is he's a father, he's a husband, he's a man of God, he's a property investor, he's a tax expert, he is an entrepreneur, and he's going to be talking to us about the issue of the code, the tax code. So let me welcome Mr. Mandilake Nondenja. Say you are already co-host.
Okay, I'll appreciate that. Greetings, Mr. Fololo. Thank you so much for the warm welcome. It's definitely exciting to be here tonight. It's exciting, and it's not necessarily intimidating. I think it's just a matter of just getting the excitement to the point where you hope that you will be able to articulate everything that you want to share with our people in a manner that they can understand, and not only just understand, but also go and implement. Because I think the biggest thing that we lack as an African nation is the implementation of the knowledge or the information that we have access to. And I think this session tonight should actually be embraced. If I had someone that would share the information we're going to share with us tonight, when I was actually just off university, I would have been very far in terms of my property investments. I would have been very far in a whole lot of things. But anyway, that was my greeting. I'm not sure if we are ready for me to go. Mr. Fololo, just give me indication there.
Yeah, we are ready to go, Mr. Nondenja. You can take it right away.
All right. Awesome. Then let me just quickly share here. I will use a slideshow just to guide me in terms of the things that I want to touch on. Just let me know if you can see my slides.
Perfect. We can see it, sir.
All right. Thank you so much. So greetings, everyone, once again. Thank you so much for joining. I'm hoping that you are going to give me the next 30 minutes so that we can actually just make sure that we are giving you the punchlines, so that by the time we are done, you are left with something to go and think about, and knowing exactly that you actually have heard the conceptual view of what we're going to be dealing with. So understanding property taxes is key when it comes to the aspect of building wealth. I have one of the things that Mr. Fololo might have, he actually did touch on the fact that I've worked for the revenue services, and I understand what it is to instill the fear on the people that are the recipients of the messages. I never sent anyone messages, but I'm just saying, I know what it is to actually, when you are dealing with people's tax issues, and I've actually had the privilege of seeing things from the revenue officer's point of view. And I've been able to distinguish or to actually pick up some of the things that are really affecting our people. And I'm saying our people, Black people. And I will make this clear, because this is not a racial issue, but it's a matter of fact that we came across the taxation system when it was already functioning and it was well oiled, and ancestors, the people that lived before us, they didn't really understand because of they did not have much, and they didn't actually think understanding tax was one of the important things that they actually had to deal with. They had apartheid to deal with, they had deaths and all of the other things, but we are part of the information age. So we have the privilege of being able to have access to information that they didn't have access to. And therefore, I understand that a bigger majority of the population is not aware or does not understand how the tax system works. And I mean, even the richest of our people, they are able to make money. And this is one of the key things I stand for. Never fall for the aspect of making money and make it seem as though that's how you are making profits. We're going to talk about that. Entrepreneurs know this, mostly those who do tenders. There is a misconception amongst tenderpreneurs where they think that the money that they are making in a contract, before they incur the expenditure that they need to incur in order for them to carry out the contract, they think that's their money. That's why we go and buy Lamborghinis and all of that. We will talk about the perception of success versus the actual success, all right? So let me just, before I get ahead of myself, let me do proper introduction of myself. So Mandilak is my name, Nontenja is my surname. I was born and bred in PE. I come from a child-headed home. I'm saying all of this so that you can understand what inspired or what guided my footsteps towards actually being interested in property ownership. So when I was born, I had a sister who was 11 years older than me. My mom didn't have a house of her own. She left me with my sister when I was 3. My sister was 14. So the biggest dream I've ever had in life was to own a house, a home, you know, because I moved around all my life, most of my life when I was younger, moved around family members, you know, so I knew the whole issue of rejection and, you know, being told where to get off because I didn't belong, you know, I didn't have all of that liberty. So it made me to focus on one thing in life. I just want to get a house for my family. And actually the funniest thing is, or not funny, the profound thing is that my mother named me Mandila Keikaya when I was born, which means let me build my home. That's where my name came from. So it was prophesied and it actually stayed with me and I worked on it. So the biggest thing, I think one of the things I didn't care about, whether I drove a car, that didn't matter much, as long as I would get to get my family out of the cycle of being homeless. And I actually got interested in buying my family home. So yeah, let's continue then. So when I went to varsity, I actually did a BCom accounting. After doing the BCom accounting, I actually didn't do my honors at the time. I got an opportunity to go and do my articles in auditing in an audit firm. Then right after 3 years of that, I actually got an opportunity to go and work for the revenue office, which is SARS. So I worked for SARS for 8.5 years. All right. So I've been with SARS for 8.5 years. I'm no longer there now. I got a promotion somewhere, but I still deal with taxes. So that is my experience. I've been dealing with taxes partially when I was in the audit firm, just doing taxes for the entities and all of that. But I got to spend more time and delve deeper in issues of taxes when I was in SARS, okay? So that's where I got to see the plight that our people are actually lacking information and understanding, but we're going to unravel that and we're going to unpack it as I continue. All right, so one of the things that introduced me or launched me into the property space was the first best mistake. That's what I call it. I was actually chatting with Lord Robert during the week, and I was actually telling him that the first best mistake I made was to buy a house in PE when I was in PE, as I told you where I come from. So when I got an opportunity to afford a house, I bought a house. And at that time, I had no clue. No one in my house has ever bought a house. So I didn't know terms and conditions. I didn't know about hidden costs. I didn't know the implications. All I knew was these guys, the developers said, this is how much you're probably going to pay if you buy this house. I thought I can afford that. Let's go. And I'm glad that it was actually in the suburb when I bought the house. So I bought this house, and when I bought it, little did I know that there are hidden costs, like you have your homeowners association because it was within a complex. you have your levies and your rates, you have your municipal bills. So by the end of the month, each month, literally, I would be left with 1,000 rand after all the deductions have actually been taken off my salary. 1,000 rands. So I had to eat that out of that, and I had to actually get to work out of that money. But that actually was a blessing because it also helped me to work harder. Because one of the things we need to come to terms with is the fact that professionals are struggling. Okay, professionals have nice jobs, but we only have those jobs that allow us to afford a certain lifestyle. And we are so bound by the wrong kind of debt to such an extent. Our lives are a matter of we go to work so that we can maintain the debt that we owe. We are not happy. We've got big gross amounts that are reflected in our pay slips. And the biggest expense that we are paying on that is taxes. I'm going to touch on that. The biggest expense that we are paying on that is taxes. And one of the things we need to realize is the fact that on a personal income tax level, which means when we're talking about a personal income tax level, if you are an employee, that's your category, you belong there. That means SARS taxes you based on the tax table I'm going to show you. And on that personal capacity, if you are getting your money from an employer because you are employed by them, you have very few allowances or deductions that you can deduct against the income you are making so that you can pay less tax, okay? And there are a lot of limitations on that. That's why it's very difficult for us to think that we can be wealthy from a paycheck. I'll show you why I say that. Being wealthy out of a paycheck is one of the very rare things we are ever going to come across in life. That's why you're going to hardly hear anyone who says that they are employed and they are wealthy from that system, because most of the salaries that we earn are going to be taxed to a maximum percentage of 45%. Okay, let's just continue. So I'm going to be dealing with the lessons that I've learned in the process so that you can relate. I don't want to give you deep text jargon and deep text sections, but I will actually just help us, because remember, after this, the aim is to actually get you to contact us if ever you need a one-on-one so that we can actually deal with your situation based on the merits of each case. Okay, we don't want to give you a generic answer, because each individual has a particular and a peculiar situation which needs specific and more tailor-made solutions. All right, so let's go. All right, so these are just to introduce what we're actually going to be really dealing with. So I've already stated the fact that one of the things I came across was the plight of the lack of information or understanding of our people. We don't understand tax, and tax is the bedrock of everything we do financially. It doesn't matter whether you are wealthy or you are poor. Everyone is bound by the tax law, and you are bound by the tax law from the moment you are born. Even when you die, we still are bound by the tax law. So it's very imperative for us to understand that SARS is a necessary evil. Okay, that means this is something you cannot run around. This is not something you can escape. It doesn't matter. You can actually work around cutting it down. Okay, so there is what is called tax planning. We used to talk about tax evasion and tax avoidance. Now we talk about tax planning. Tax evasion, by the way, is illegal. You don't want to be found in that route, and stay away if ever you are part of that already, because it's going to come back for you. And when it comes back, it's never nice. So tax evasion is not an option. That's when you are illegally avoiding tax. Okay, you're doing things so that you can actually reduce your taxes, or so that you can claim refunds from SARS. And there are people who go to tax practitioners that guarantees them refunds even before they even see the information. Run away from that person, because the moment SARS picks up on them, they always say, no, this is the information that I got from the taxpayer. I submitted what the taxpayer told me to submit. So they are never in the wrong. SARS is always going to come back for you who actually submitted the information. All right. So it's very key for us to understand how to work with SARS, because you are going to have to deal with SARS until you die. So I don't see why you would actually want to run away from understanding something that's going to be with you forever, all right? So, but these are then the key things that we need to understand for us to have a workable solution in how we deal with SARS, okay? SARS deal with us on what is called 4 pillars of compliance. Everyone, whether you are a natural person, which means natural person, me and you, people who are breathing, you can go to work and all of that, you're a person, okay? You're a natural person. And then also legal persons. So legal persons are your companies, your trusts are also regarded as persons, but because of it's an entity as well, so it also falls under the legal person as well. So those are legal persons. So we are all judged under these 4 pillars, right? SARS has 4 pillars of compliance. You will always be penalized based on these 4 pillars. 1, registration. If you are a person who is working, okay, you need to have a tax number. So your employer at this point in time normally takes it upon themselves to register all their employees, all right? But if ever you are not registered by your employer, do inquire concerning that, because you should have a tax number, right? Registration. After that, we call filing, all right? So filing is, there's a statutory requirement for us to file, whether you didn't make money or you did make money in a year. SARS does not ask that question. All they are saying is, if you have a tax number, declare or file. You must actually go, even if you're going to file a zero return, you actually go and file. So if you have outstanding returns, SARS will penalize you, okay? So make sure that you get all your returns filed. And then we actually go to declaration. Declaration then is the accuracy of the information that you are inputting or inserting in the return. If you're saying to SARS, I did not make money this year, and SARS picks up on the bank account that you have movements on your bank account of R1 million, SARS then will raise and assess an estimated assessment, okay? Which means that they will calculate for themselves how much they think you should owe them, because they can pick up that you did receive money, even though you're saying to them you didn't receive any money. Then you will actually have to pay taxes on that, as well as penalties and interest, right? So you want to run away, you want to get away from that as far as possible. So get someone who understands, so that they can actually show you how this is supposed to be done. Then the last one is payments. Payments is, if ever you declare and you end up with a tax liability at the end, SARS needs you to pay that. So you don't just see that, oh, okay, I've submitted my return and then I owe SARS so much money and then that's it. You have to pay. So if you actually get all of these right, then you will be in right standing with SARS. You love SARS actually. You would want to have more interaction with SARS to such an extent you will not be scared anymore, because of, you know, that you are in good standing with them. But if ever you have any of these pillars not in the right place, you're always going to be running away from SARS. If ever you need more information on this, contact Lonwabo. We're going to have more chats around that. Okay. I want to touch on the aspect of the wrong way of acquiring assets. I'll give you even examples. So we as people, okay, we have the wrong impression of success. And I'm sure most of us here, if we see someone driving a Ferrari or a Lamborghini, or we get amazed and we're just thinking, one day is one day, I'm going to buy myself a Ferrari. As long as I can get enough money, I can go and actually buy that Ferrari. And we don't understand when rich people say, this is a tax write-off. Okay? There's an importance for you to understand the difference between you buying something that will make you look good. Okay, they say poor people always want to appear rich. Rich people don't bother. I mean, as much as it's actually it's a popular statement. A whole lot of people will tell you about how Bill Gates or how Mark Zuckerberg is actually dressing. Those guys would normally be in their black t-shirt and their jeans. He probably has his wardrobe full of black t-shirts and jeans, because he doesn't need stuff to validate him. That he's successful. His success is already there. We are actually we have the evidence of it on a daily basis. We're using their apps and all of that, so everybody knows. So it's key for us to understand that this is where the rich are divided from those who are wannabes. Okay, wannabes normally don't have success that goes over one generation, and this is key because SARS is normally, or even the IRS for that matter, because tax laws are really similar right across the world. So these principles that we are talking about here apply right across the world. They are not just limited after you actually cross the border. You cross the border, same principle. So if I could be actually taken out of South Africa and actually have to start afresh in whether in Europe or whatever, I'll still use the same principles and I'll prosper the same way because of I'm following a pattern that I know that works right across. Okay, so the wrong way of acquiring assets is something that we need to look at. Never buy assets, or actually let me never buy assets, your property, using your money if you are going to rent it out. Never buy assets, which is your real estate, if you are going to rent it out. I'll tell you why. Number two, never use credit to buy depreciable assets if you have real estate that you have bought on credit. These are key things. I know that, and I actually learned this also having gotten into the system of making debt, but at this point in time, I got rid of any other debt. Debt I have at this point is related to the properties that I own, and I finance all other things based on the equity that I realize. We're going to speak on that because we need to understand the system, because there is a system that is in place. And if we don't understand the system, we are going to keep on making the same mistakes, and we are going to find ourselves in a place where we have palpitations at the end of the month because we can't meet our bills. All right. So there's a difference between accounting principles and tax principles. I don't want to spend too much time on that so that we can actually just get through with the examples that I want to give. There's also an issue of misunderstanding concerning debt. We have been taught wrong about debt. We've been taught that the best thing you must do for yourself when you are working is to try and get rid of debt as quick as possible, such that most of us are paying debt which is related to our real estate properties. We are trying to pay our houses within 5 years and 10 years. And most of these houses are investment properties. When I'm saying investment properties, we're talking about houses that you are renting out. You have tenants and you are receiving rentals at the end of the month for these. I've spoken to a number of my friends who had actually gotten in, who had fallen into that trap. They thought if they pay off the house quick, they will save on the interest on the house, because I do know that when you have bonded your house, by the end of the bond payment term, you would have paid 3 times the amount that you bought the house for. And most of us don't understand that interest on that bond is a blessing to us when it comes to taxes. I'll tell you how. I'll show you how. So stick around so that we can actually just get this correct. Lack of understanding of the system. So one of the things that I normally say when I talk to people that I've actually interacted with concerning the real estate industry is the fact that when I came across the principles of tax in the real estate industry, was the fact that it seems like the finance industry, the banks, and your credit houses, when they were putting together the formation of the bond system, they took into account the tax system so that it would favor those who understand that the financing of the properties. If they actually do it right, they would always get tax credits, and they can become wealthy only from owning real estate properties or properties. Let's go on to the next slide so that we can talk about this. So if I am actually going to touch on some of the things that we've all come across probably on social media recently, there's a recent spate of events where we saw Uzoto Wabantu buying a Lamborghini. I'm not sure how many of you had actually seen that. She bought a Lamborghini one time and she posted it on Facebook, and then the next day it was gone because, and I think Kenny Kunene had to give an explanation as to how Uzoto Wabantu could buy a Lamborghini doing poultry. Poultry is actually selling eggs. That was funny to a whole lot of people, because one of the things that did was the moment Uzoto Wabantu posted that, it attracted SARS attention, saying, I could buy a multi-million rands worth of a car, whilst I am saying to you on an annual basis, probably, or on a monthly basis, I'm earning 20,000. Let's just say Uzoto Wabantu was saying to SARS, I'm earning 20,000 rands. And when SARS does a lifestyle audit, they look at what are you saying you are making in our books before you can say you afford the things that you are buying. So when you look at someone who earns 20,000 rands and you look at someone and these people are buying a car, let's just say this car is actually worth 4 million rands. The 4 million rands is going to be paid over 5-6 years. And that means on a monthly basis, your amount, the amount of repayments that you're going to be making on a monthly basis to Lamborghini or to whoever that you actually bought the car from is going to be even more than the salary that you are declaring on your returns. All right. So we must be watchful of these things. We've seen a whole lot of people that have posted things today, and then tomorrow we heard that they were in trouble with SARS. Whenever you are going to get into a flossing moment, make sure that you have your cracks covered. If you do things according to the system that I'm actually going to share with you, you will have no issues posting your Lamborghini. If you bought it cash, probably you're going to be able to buy it cash, and you will owe no man nothing for that, but you'll probably be owing more for your real estate, meaning you will earn more interest that you can reduce your taxes with, so that you can get on a state or a potential zero tax to pay or a refund status. Okay, that's what we are aiming for. We want to get to a point where for our taxes we are able to get on an assessed loss. Some of us don't even know that there is a term called assessed loss. When you're not making a taxable income according to SARS, you are making an assessed loss. Then that's where SARS owes you instead of you owing SARS. Okay, we'll get to how we get to that. I must just look at my time. All right, Mr. Follow, we're still okay on time?
We're still good, brother. We're still good.
Okay, and no questions so far, so that I can't actually look at questions right now.
Yeah. I think let's rather, the flow is perfect. Let's rather note the questions, and then right at the end, we can then open the floor to any questions.
All right, fantastic. All right. So we are going to contrast then the idea of success against the understanding of actual success. All right. I do know it's, we misinterpret envy and jealousy for passionate drive. We must always check ourselves. When you see someone driving something nice, don't envy them if you don't understand how they got it. At this point in time, I promise you, I don't get intimidated with people's stuff, not because I undermine or anything, but because I've come to understand that, you know, there are processes and there are systems, and it helps you at times to actually kind of, you break things down to a simple level for yourself, so that you don't sleep at night with a sad heart or trouble because you think other people are more successful than you. Some people have access to things that they can't afford really, but they actually, they have access to them, all right, for a short space of time. What do I mean by that? There are people who can actually, whom the bank gives debt to, which is so big, they make the wrong decision of using that debt to acquire depreciable assets instead of them acquiring appreciating assets, and then use the equity to buy depreciable assets so that they can actually enjoy success, because that's success. If you can buy a car with the bank's money and you don't owe anyone for it, and you just keep paying for the house, yet you have two assets from the same bond amounts, tell me who wouldn't feel successful in that? When we actually, I don't care, we could do speed racing and all of that. I don't mind when my tires actually run off, because I know that I don't owe the bank a hefty amount at the end of the month. Okay, we'll talk about that. And then we go to, so how much one makes versus what one does with what they make. Sorry, I left what there. So how much one makes versus what one does with what they make is critical. I'll make an example that someone who earns 2 million at this point in a year, okay? If you earning 2 million, you are probably just going close to 200,000 on a monthly basis. And trust me that your taxes on that are probably going to be, if we look at an annual amount, they are over 500,000 rands, if not over 700,000. Okay, so we can say out of 2 million, you are taking home about 1.3 million, and that's if we are not taking into account your pension and all the other things. So that means on a monthly basis, from the 200,000 rands, you could easily be taking home close to that 100,000. And out of the 100,000, if you buy a car that's going to cost you 30,000 on a monthly basis, and buy a house, because that's what we normally do. If I earn 2 million rents, I must live a lifestyle that shows everyone that I actually am there. So I'm going to go and buy a house in Blue Hills. That's probably going to cost me on a monthly basis something that's going to be close to 50,000, all right, on a monthly basis, because I can afford it. And I'm going to buy a house, or sorry, a car that's going to cost me about another 20,000 rents. We're on 70,000 rents. Out of 100,000, we've already taken 70,000. You are on 30,000 rents. We've got kids, we're taking them to school. Probably the private schools or whatever schools that we are taking them to are costing us probably another 20,000 rents. And this is a reality, good people. Don't think that I'm making this up. This is a reality. So you have someone who comes from almost 200,000 rents who gets left at the end of the month with almost 10,000 rents. And out of that 10,000 rents, the stuff that they need to do to maintain the house and all of the other things, they actually get left with money to get to work. And I hope you actually have seen people like that. And those people on a daily basis are also looking for extra money to make. Yet they could make use of the money they have access to on a monthly basis, because what that helps them with is access to credit. And having access to credit is a blessing, because the more credit you use and that you're using right, the more interest that you can actually generate, that you can actually reduce your taxes with on a monthly to an annual basis. I'm going to get to the details of that. All right. So one of the things I believe in, this is key for me. This is a biblical principle. It says a good man leaves inheritance for his children's children. When I die, I don't want my kids to start from scratch. I want to leave wealth for my children and their children. And this principle is going to help me do that. All right. So getting to the PIT. So I'm talking about that one guy. All right. Before we get to talk about the one guy, these are the stats that I actually retrieved from the 2018-2019 tax years. Okay. These are the different groups that have contributed to the fiscus, which is to SARS. In totality in that particular year. Okay, so PIT means your personal income tax. Your labor force is the biggest contributor tax-wise to the fiscus, which is at that time it was 38.1%. It might have gone up now. So it's 38.1%. 38.1%. You can calculate. We are over R1 trillion that we are collecting on an annual basis now when it comes to the SARS target, all right, on an annual basis. So 38, almost 40% of that trillion and more, the trillion and some billion rands that we are generating as SARS on an annual basis, 38, almost 40% of it comes from the workforce. So what do you think the government wants you to do? Would they promote you have your own business, or would they promote that you actually be employed? Think about that. Then your VAT is your next biggest contributor, which is almost 30%, is 25.2%. Then your CIT, which is your corporate income tax, your companies, they only contribute 16.6%. Just look at that. It's even below half of what the workforce is actually contributing to the fiscus. And just tell me, do you think the government is going to encourage that we actually all fall on the third bracket? I don't think so. Then you have your fuel levy. Don't worry about those, because very few of us are actually involved in that. But I want you from this graph to actually see how this is actually affecting me and you in terms of how we are generating our income, right? So creating wealth from a salary is really something that is out of the park. It's just a dream that we all have. It's a nice idea, and I'm not saying stop working. I work. I have an 8 to 5 job, and I use that so that I can actually access money that I can use so that I can access credit. Okay, that's very important. All right. So this is the tax table for your personal income taxes. So if you are earning between 1 rand and 216 taxable income, 216,000 rands taxable income, you pay up to 18% taxable income. But if you earn over 1.6 million, you pay taxes of up to 45%. So there's a standard amount of 587,000. Okay, you remember that 2 million I was talking about, 587,593. That is standard. They are going to tax you that. So if you are earning 1.7, the difference between 1.7 and that 1,656 is going to be taxed at 45%. So if you're at 2 million, it's going to be 2 million minus 1,656, then it's going to be multiply that by 45. Then that amount that is actually coming from that is going to be added to this 587,000, and is going to be broken over the 12 months. And that's what we call your PAYE, your pay as you earn. We have broken that debt, that burden, so that you don't have this big debt at the end of the year where you're going to have to pay almost 800,000 rands at one go. All right. So PAYE is really just that debt broken over 12 months. All right. I'm hoping that you're actually getting tips. I do know for some of us, we've just been doing this and we haven't really understood what it was all about. Okay, so I don't want to spend too much time on this. I've already taken time on breaking down a lot of nitty-gritties, but I know that most Black professionals make a lot of money, but they pay most of it to SARS. I've just given you now an example in terms of the tax tables. Now, also you have people that are trading or that are running their business on their personal capacity, what we call sole trading. So you are still subject to the same tax tables. I've written these examples because I was personally involved in these. I know doctors that have actually consulted at some stage that were in Cape Town. These guys, they were Black doctors. They were saying to me, they don't understand why are the Black doctors closing their practices where they are operating whilst white people are seemingly thriving in the same environment. But the one thing that they actually kept saying that they didn't understand, there was an ink at the end of each of these businesses' name, which means there was, these guys were registered. They registered their businesses for it to be incorporated in corporation. So you can use that. That's for professional services, because you have a flat rate there of 28% compared to what could get up to 45%. That already brings you to a tax saving of over 15%. Okay, that's just in terms of the vehicle you are using in order for you to actually carry out your business. Don't entrust your accountants with your financial affairs. I know a business person in Durban. This guy was thriving. His business was in millions, and trusted his accountant to actually deal with the compliance and tax related matters. In less than 5 years, this guy's company went down and went under. This guy ended up going to stay home again because the accountant had misrepresented the business guy in terms of declarations. When SARS came for him, he actually stripped him naked. This guy had to start from scratch. At least take an interest or get an accountant that have your best interest at heart. This is my gospel that I'm actually sharing with business people and people that actually have to pay taxes. Get someone at least that you have a relationship with, who's not going to say, oh, okay, I'm going to submit, give me your documents and that's it. But these people must actually come back to you, at least have a one-on-one now and again and say, I see you doing this here. I see you doing, this is where you can improve. This is where you can increase. This is where you can decrease, so that you don't pay all your money to taxes. No one wants to work for SARS. At least I'm happy I can say that now because I'm outside, so they're not going to penalize me. But you don't want to spend your money on SARS. Lucky Dube used to have a song that I know all the other people that I'm paying, why I'm paying them. But there's this one guy, I don't know why I'm paying him. It's the tax man. And I mean, I do know that we're paying for the roads and all of that, but you don't want to spend all your money. You don't want to be the one that's sponsoring the population and the income and all the other stuff that we're actually asking with your money. All right. So you want to get a grip on that. Then reducing tax by balancing salary and declaring dividends. This is key for people who are in business. Pay yourself a salary, but your accountant must help you get to measure how much salary you're supposed to pay yourself, so that you can pay less tax or the minimum taxes when it comes to your personal tax tables. That means if you can pay up to less than 28%, because if ever you are going to pay, you're going to actually use the profits from the company using the tax rate, you're going to pay up to 28%. But if you are declaring a dividend, you are only going to be taxed at 15%. So you want to make sure that you reduce your salary, the salary that you are paying yourself, to the minimum rate of tax that you can pay, then take the rest and make it a dividend, and declare a dividend to yourself, so that you can pay the least amount of taxes. All right, we don't have much time to actually spend on that. Early settlement of properties is a no-go unless it's a primary residence. That means it's the house that you are staying in. You can settle that house because the only way you are going to generate money from the house you're staying in, which is your primary residence, is through equity appreciation or capital appreciation. Okay, capital appreciation is really the difference between the outstanding bond amount against the bank and the value of the property. So the value of the property is always appreciating and your bond amount is always decreasing. So the difference between the two is the equity, all right? And that equity is not an artificial growth. It's something you can go to the bank and tell them, because this is how the bond works. When the bank gives you a bond, they give you debt against a security. That's why it's a secured loan. All right, excuse my excitement. It's a secured loan. So if you fail during the period of your repayment to be able to pay, if something happens to you, you can't pay anymore, the bank can go to your house and sell the house in order for them to recover the amount of money that's outstanding. Okay. Now, at the same time, that house which you own, which the bank gave you money against as a security, is working for you. This is more like a business, okay? It's working for you because you actually are the potential owner. As soon as you fully pay the bank, you're gonna get the title deed and all of that. But there's substance over form. Because you stay in the house is yours, okay? Using the bank's money, and then the appreciation in the value of the house is yours. So you can go back to the bank and say to the bank, I bought a house for 500,000 rands 5 years ago. I've been paying you my bond repayments, and now I owe you 450,000. My house is worth at this point in time 700,000 rands. So there's a 200 not 200. There's a 350,000. Okay, so no, 250,000, sorry. So 700,000, and you actually are owing the bank 450,000. There's a 250,000 rands equity that's due to you. So you can go back to the bank and ask the bank to give you or to refinance the same house using the current value of the house. They will also redo the offer to purchase and all of that, but they will give you 700,000 rands now. Then once they know that you actually owed them initially 450,000 rands. Now, you get cash that 250,000 rands, and whatever you do with that 250,000 rands is all up to you. But your bond repayment on a monthly basis is going to go up for sure. But the blessing there is your interest amount if you are lending that house out. These are key points. You want to increase that interest as long as possible. So you can pay your house, your car off if you have a car that's worth 250,000 rands. So you have a car that's worth 250,000 rands and you are paying a house that's worth 700,000 rands. The bank is still satisfied because still if you can't pay that house, they will still sell your house in order for them to recover their money. But you will go out of that house with a car that you bought using the bank's money. I'm hoping you're with me on this. All right, let's go. Let's continue. All right, let me rush quickly because I don't want to take it now on financing of acquisitions. Then this is very key. The importance of financing your acquisitions, the form of acquisition. When I'm talking about the form of acquisition, using your money versus using the bank's money. Those are the comparisons that we are making here. Now, I'll give you the advantages and the disadvantages. Advantages of using your money in order for you to actually buy a property. That means one, you are losing out on the tax benefit of the interest. Now, this is how the bond repayments on a month-to-month basis is formulated. 85% of your monthly repayment, almost 85%, between 75 and 85% of your bond repayment is interest on the bond you have made. And that 85% interest is deductible. When we're saying it's deductible, it is allowed to reduce your rental income for tax purposes. If you are renting your house out for 10,000 rands and you are paying the bank 9,000 rands on a monthly basis, 9,000 rands of that, 8,500, let's just say. So to make maths easy, 8,500 of that 9,000 rands is interest. And that interest is allowable by SARS to reduce that 10,000 rands from 10,000 that would have been taxed to 1.5 thousand. Okay, so now SARS gets exposure to how much they can tax from you of 1,500 instead of 10,000 rand. I hope someone is getting this. I just want to get an indication if someone is getting this, because this is actually the key part of this presentation. One more time. All right. Let me do it one more time. If you buy your house cash, can take it slow. All right. Okay, I'm too quick. All right, I'm gonna try it. All right. So if you buy your house cash, let's just say an investment property now. I buy this house for 500,000 rands. All right. I'm going to rent it out. Let's say $1 million. Let's just say $1 million, and we're just gonna make round figures, use of round figures. I buy an investment property of $1 million rands. Okay. And as I buy this property of $1 million rands, I'm renting it out on a monthly basis. I get 10,000 rands in return as a rental from my tenant. Okay. If ever I bought that cash, SARS will tax me on the 10,000 rands because I have no deductions against that 10,000 rands rental that I have, because if ever you're going to claim interest against the 10,000 rands that you are getting from your tenant, SARS is going to ask for the proof of that, which is your bank statement. And the bank is going to show you that, no, this person doesn't owe us any money for this particular property. So that means he has no interest that he owes us. SARS scraps that, and they actually tax you on the 10,000 rands. So 10,000 over 12 months is 120,000 rands. 120,000 rands, if you are using your company, let's just say flat rate is going to be 28%. Then it's almost about 30 some odd thousand rands. That's 1 year. You are paying taxes of over 30,000 rands because you used the wrong form of financing. But if ever, okay, then we say if ever you're using your personal capacity to actually run these properties, then you're going to pay depending on the bracket, because remember now that 120,000 rands is going to be added to the amount of money you're already making. If you have a salary that takes you to 1 million rands or more, it can actually take you to the last bracket. Now SARS is going to charge you with that 45% on that 10,000 rands. So you're going to be paying almost 50,000 rands on the rental income that you are making, all because you've actually used the wrong way of financing. But now look at this. If you buy the same house for 1 million rands, you ask the bank for a bond. The bank gives you the 1 million rands, and the bank says to you, you're going to pay me on a month-to-month basis 9,000 rands for the 1 million rands worth of the bond that I'm giving you. 85% of that 9,000 rands you are repaying me, which is, okay, let's just say 8,500 or 8,000 rands. Let's just say 8,000 rands. 8,000 rands of the 9,000 rands is interest. The 1,000 rands of the 9,000 is capital. So that means you are reducing your capital outstanding bond with 1,000 rands on a month-to-month basis. So 8,000 rands of that is interest. Now SARS says you are earning 10,000 rands rental income on a month-to-month basis. The bank is charging you 8,000 rands worth of interest on the bond that you are repaying. SARS is saying, I'm allowing you to reduce your rental income then of 10,000 rands with the 8,000 rands. Then you only get taxed on the 2,000 rands. Now that means 2,000 rands multiplied by 12 is 24,000 rands. You get to pay taxes on the 24,000 rands if you're using a company. 28,000, your 28% of the 24,000 rands. That's nothing. You actually don't pay anything over 10,000 rands. And then if you are actually doing it on your personal capacity, even if they go 45% on that, it's not going to be, it's just going to be over 10,000 rands. I'm hoping you got that. All right, I see. Wow. Okay, I see people. I think people are getting it. All right, so that's the importance of the right financing. And you need the 20 years to 30 years. I use 30 years at this point because that's the amount of period that I get to make use of the interest portion of the bank's money to reduce the taxes that I'm paying. To tell you the truth, on a month-to-month basis or on an annual basis, you are bound to make a refund from SARS, because over and above the interest that you are allowed your levies, you are allowed your homeowners association, you are allowed your agency fees. So chances are you are going to be paying more than what you are getting. And all of those allowances are going to put you on the refund state every year with SARS. So SARS gets to pay. The important part, you must just keep your documentation safe. I think I've just given you enough. Let me. I think at this point, Mr. Follow, let's hold it there. because the further, yeah, repairs and maintenance. Yes, thank you, Mr. Momo. Repairs and maintenance and all of those, you actually get, if ever you incur, you paint the house, or you actually, as long as you don't improve it, because if you add any capital, if you incur any capital expenditure, that adds towards your capital gains tax. We can talk about that in more detail when we are actually seated and when we're actually having a one-on-one, because those are more detailed nitty-gritties that are really pertinent for each and every individual here. Mr. Fololo, I think let me hold on there.
Wow, that is quite a lot of information, and I know that, you know, time is people often use this term and say, you know, time is the enemy right here, and I want to agree with them on this one, because we have not even spoken about, you know, all the other things like your section 13 and all those beautiful things, how we can actually get there. So so yeah, this is quite exciting information. I think there was a question, quite a long one. I think maybe we want to go through this particular one. So Tumelo says, number one, what is the criteria for declaring rental income? Does the property need to be registered in my name? So meaning, you know, is the property in his name, his company name, in a sense? So that's question number one. Question number two, if I have never declared my rental income, how far back do I need to declare the income? Is it from when the property was registered in my name? That's question number two. And then question number three is, how do I go about declaring the rental, declaring the income? Do I wait for the new tax season and submit my returns then, or can I submit anytime as of today? I think that's quite an important one, because there's a lot of guys who are doing, let's call it, you know, multi-lets, right? You know, I bought a house, or this house was my home, I inherited it. I decided to put 3-4 flats, and I'm renting, you know, these 3-4 flats. And because for me, it doesn't, maybe in my thinking, it's not a substantial amount of money. Maybe it's 5 grand a month or whatever. So I never thought to declare such income, right? So I guess, you know, what Tumelo is basically asking is along those lines. So maybe let's spend another 2 minutes, you know, in entertaining that particular question.
All right. Thank you so much, Tumelo, for that detailed question right there. I think it's quite critical. So you start declaring, first of all, from the moment, because SARS, the moment you make a taxable income of 1 rand, or actually the moment you can make any taxable income, SARS wants you to declare. So the moment the house was declared, or sort of was registered in your name, or this is another scenario that normally confuses people. The house that I bought in P, I used to stay in it, okay? So I didn't have any rental income on it. I didn't declare any rental income. But when I left PE for Joburg, I rented that house out. And by the way, SARS can pick up on the registered properties in your name. So they will definitely make up their own minds when it comes to a person who has more than 1 property, that you are definitely renting the others unless you can prove otherwise, okay? So the moment the house is rented out, so the moment you have a tenant in your house, so if it's registered in your name and it's the only house, SARS cannot easily pick up that it's actually not your primary residence, okay? But when you get a tenant who pays you a rental income on a monthly basis, please start declaring that, because you don't want SARS to go back. Because normally whenever we deal with stuff retrospectively, the debt is normally too much, okay? So as to prevent that, just start when you start renting out your property. That will actually help you. And also, if you use these principles that I've just helped you now, you will probably pay up close to nothing when it comes to taxes. It's just for you to meet the requirements, which are, there's a statutory requirement for you to file your returns. Okay, that's key. And then, so we said the next one, that the property need to be registered in my name. You will declare it in your name if it's registered in your name, but you will declare it in the name of the company if it's registered in the name of the company. You will not be confused about that, because when you are buying your property, that will determine, because you will go to the bank is going to ask you, are you going to buy this property in the name of the company, or are you going to buy it in the name, in your personal capacity? Those will distinguish with that. So you will actually know where it's actually registered, whether it's in your name or it's in the name of the company. All right. How far back? Go back as far as your registry, or go back as far as you had a tenant in your property. Is it from when the property was registered? Okay, so I think I've answered that. How do I go about declaring income? Do I wait for the new tax? No. Anytime. You actually, as long register for e-filing, please just register for e-filing so that it's easier. You don't have to go to SARS and all of those things. It's easier at this point in time. Declarations are very easy. So just register for e-filing. If you don't know how to go about that, reach out. I hope that answers Tumelo right there.
Awesome. Tumelo says, thank you very much, gents. So Mandilake, that was quite a lot of information, and I think everyone on this call would want us to actually continue from where we left off, because there's such a lot of information that we've not even touched on. Because I think the bottom line right now, I think the bulk of the information was, how do we get right with SARS? That's number one. And also, how to get, deductions and stuff like that. But I think the next step would be, someone like Leseja, someone like Uzola on the call. Let me see some names that I recognize here. Someone like Ulanga, someone like Oyama, or anyone, right, who has an appetite to build a substantial property portfolio. There is a part that I would want you to maybe when we do the next session, to just maybe go over, because of time now, the part of, my man, I love cars, right? And, I love real estate, but, the thought of buying it cash and, so it just becomes, but then if one can do that, with equity in their properties, right? And, increasing their interest, portion that is paid over to the bank, lowering their taxable income. This is just like it's like a holy grail of wealth creation. So I guess what's going to help us is we will schedule another call, guys. You will be notified on the relevant channels, Wealth Academy Facebook page. You can follow us on Instagram. And we've also got a group, Property Investors Club. That's a group name, where you can, be updated on the next, call that you're going to be doing. But over and above that, we are organizing a webinar that is going to be on the 19th of February. This is going to be like a half a day, very, very informational webinar that we're going to be organizing together with Mr. Mandilake and a few others. Leseja on the call, Leroy, Liche, people coming from diverse background when it comes to wealth creation. So, we are going to slice this elephant and we are going to eat it piece by piece. And, someone who specializes in cooking for us, the leg is going to cook the leg for us to eat, right? And someone who specializes, so it's going to be very, very, informational. So what we'll do is we will send out the link for those that want to register. It is going to be like a half a day seminar, which is going to be followed, later, around March or April, which is going to be followed by a live seminar in Johannesburg, where it's going to be a full day. And we're going to be teaching everything that there is to teach so that, we are better, equipped to go out there and build, generational wealth, right? So Mr. Mandilake, thank you very much for this very informational call. Thank you very much for everyone who attended. And so if you've got an issue and you want a one-on-one consultation with Mr. Mandilake, do email us at info@wealthacademy.co.za, info@wealthacademy.co.za. And that's how you can get, we can schedule a consultation session for yourself with Mr. Mandilake regarding anything to do with taxes, right? Whether it's, past issues, current issues, future issues, right? So yeah, thank you very much, guys, for joining us. This was such an informational session. See you again next week, Tuesday, this particular time. The poster is going to be coming out. We're going to be hosting Leroy, who's a seasoned property investor, who will be talking us, through and, sharing with us his experience And as you can see, guys, everyone who comes on this particular platform in the Wealth Academy, they're all talking from experience. There is no theory here. Everyone is talking from experience, and that's the best way to learn. Robert Kiyosaki, whom I really respect and I learn from very much, talks about fake teachers, and fake money, fake everything. And right here, it's people who've got experience in whatever that they're going to be sharing. Thank you very much, guys. Have a good evening. Love you all. Stay blessed. Cheers.
Thank you, sir.